Mr. Chairman, since you took over earlier this year at the State Bank, I wonder if you could tell us how and when you expect to reach your aspiration of putting the bank in the top 50, which you've talked about this year.
I'd like to do one thing at a time, because when I took over, the results were something that sent shockwaves to the investors and to the industry. So the first thing was to stabilize the operations of the bank, and second is to give an assurance to the investors that this was one-off and the normal operations of the bank are on a sound footing. Once we do that consolidation, which we think should be over by December, then we would look at relative improvement of our positioning in the international community of banks. But right now it's even a challenge to keep the number one position in terms of market capitalization among banks. So first we would like to consolidate our national leadership position, and then we look at reaching the top 50. But it is certainly one of the things on our radar and should happen in the next 3 years.
And at the present time, you've also acknowledged how difficult it's been, especially meeting capital requirements. Lending has been somewhat problematic, and also with the rating downgrade recently, there's been some anxiety among investors about your ability to go forward. And I just wondered if you could tell us, is it going to get worse before it gets better, or have we seen the worst?
It's not easy being chief of SBI, so one should be prepared for that. Now regarding tier 1 capital, it is at about 7.65. So which of course Basel doesn't stipulate even, so we are above the Basel 3 norms, but we would like to reach a level of 8 immediately and a level of 9 preferably. And we think that both of these should be possible by March 2012. Now the question is, the loan growth has been slightly slow, but we have not been as much affected as other banks, because State Bank of India has significant overseas operations. So wherever there has been a little compression or drop in domestic loan demand, it has been more than made good by a significant and a corresponding increase in the overseas loan demand. So in aggregate, our loan book and the demand for the loan is pretty strong. The net interest margins are expanding, yes. The challenge only comes on the delinquency and the quality of our loan book. So in terms of the quality of the loan book, we think that the worst is over. This is a position of stabilization, and we are also now sharpened our risk management techniques and the recovery techniques, and working with all these companies which are in distress to work out a satisfactory and orderly repayment program.
And how has the rupee's decline this past year affected your position and also your relative strength?
Not particularly. In fact, the rupee decline in the last 3 months, which has made headlines, has also been a good news for some of our exporting industries. And a lot of our assisted companies and firms had difficulty because they were not able to meet the competition from cheap imports. Now that the rupee is at about 51.50 or 52 level to a dollar, then they are finding it a little more comfortable to meet the price competition from cheaper imports.
And I wonder if you could elaborate on that point, because the State Bank is sort of a proxy for the economy at large. Are you suggesting that you think the economy is poised to rebound here? Or
economy, of course, would show definitely a growth of 7 and possibly 7.5 for this year. So we are, and it would be one of the highest growing economies because all comparisons are relative. So in terms of the global growth, India would still be one of the top performers. But looking to the currency value, see, for example, euro has dropped from 1.68 to 1.34. Now that's not held out as an weakness for the European economies. So what has happened to rupee? It's a 8 or 10 or maybe 12% correction. So which should have come anyway.
And how much or when do you expect the government to be able to inject more money into State Bank?
the best case scenario, optimistic scenario would be December, but latest by March 2012 that additional capital should come in.
And what's the scope of that, do you think? What do you expect? What will be the scope of the lending?
For the lending?
That would result.
See, this capital, if it comes in, it helps in terms of tier 1 ratio. But as it is, we are not constrained due to lack of resources. Because Indian banks and SBI in particular have 80% of their lendings coming out of retail deposits. So the retail deposit growth is very robust, and the loan book also, if not in rupees, in dollars, there is significant demand. So we don't see a constraint in growing because of the capital, but capital helps in a way to project a stronger and a better image and a well capitalized bank.
There's a backdrop now of some encouraging inflation data that we've received lately. When do you expect the central bank to begin cutting interest rates?
See, inflation data, we had expected this moderation because this is the time when the harvest has started hitting the market. And my personal view was that this inflation had more supply side issues than the demand side. So the supply side getting corrected, we expect inflation to moderate. But as we understand from the central bank would like to see definite signs of inflation stabilizing before they start lowering the interest rates. So this kind of data, if it is consistently received for about a month, 2 or maybe 3 months, only then we would expect Reserve Bank to really roll back the interest rate hikes that they have done.
So next year?
Maybe because this financial year is coming, this calendar year is coming to an end, but I think it's always Reserve Bank looks at the inflation data close to the announcement of the policy.
And can you help us understand perhaps where the appetite overseas is for bonds and which investors?
Overseas for bonds, we are not so much big in the bond market, but we are bigger in the loan market. But the loan market, the demand is coming from Indian corporates who are expanding overseas. For example, Tata's, Bharti, and to some extent Reliance and Adani's have done significant overseas expansion, and SBI is a part of each one of those financing. And now we expect Indian what are called government companies, the public sector companies like ONGC, Coal India or National Thermal Power Corporation to make overseas acquisitions, and we are quite well positioned with providing them.
And but this rise in overseas borrowing costs has not been an impediment, and you don't see it going forward as an impediment?
We have not seen any significant rise in the borrowing cost. Average medium term notes that we have raised are between LIBOR plus 200 to 225, and we have enough opportunities to lend to good quality borrowers after adding a significant credit premium. So as of now, we are not accessing the global markets because we think the pricing would be LIBOR plus 300 plus. So we would wait for the markets to stabilize and then access the market. But you know, to put it in perspective, bond issuances are only 15% of our total overseas assets. So we have other sources of funding overseas like the capital, deposits, loans from other banks, and so on and so forth.
In the past, much has been said about the Chinese model of encouraging its banks to lend, and I just wondered if you had any thought about whether that's an appropriate model in your case.
I don't know it's Chinese model, but the Indian model also envisaged a loan growth of about 20 to 25% every year, and that has been happening in the last 5 years. But I think like the Chinese banks, Indian banks are also more domestic than international. So most of the banks, for example, even in the case of SBI, which is considered to be most international among Indian banks, 85% of the loan book is domestic. So therefore, international loan book is only what I would call the icing on the cake. The cake is basically the domestic loan book, and for Chinese banks it's more so.
I mean, if you could do anything to change for the better your structure, what would that be?
structure with regard to the organization or the financing structure?
Financial structure.
Financial structure, I think because in terms of Basel, we would be at 9% tier 1 and tier 2 put together we are at 13%. So, in terms of structure it is all right, but we would like some greater access to the long term resources markets in India, because in India the tax free bonds and the other bonds, the banks are kept out. But if banks are required to do maximum funding for infrastructure and other nation building activities, it is only fair that banks are also allowed to access long term sources of funds. And secondly, we think that the direct taxes code would possibly correct that. Today the tax treatment for bank deposits is the most disadvantageous. You have tax breaks for capital gains, you have tax breaks for dividends, you have tax break for a whole lot of other things, but bank deposit, bank interest rate is taxed at the highest marginal tax rate. So we would recommend, and I think next time when the finance minister prepares his budget proposals, we would put in a request and a recommendation to give, at least make it a more level playing field and give the same treatment for bank deposits.
And what do you think your chances are of
His
succeeding?
chances are fairly bright, very bright, because the finance minister, we have met him and at different forums we have articulated this position, and he has heard us quite patiently.
And what do you think the divided government presents as an obstacle for this
Government?
goal? The coalition government.
No, not particularly. I think we have had a coalition for last 15 years. For the last 8 years, the present government, and the 6 years before that. So, coalition government, I think, has been very useful for a reasonable growth, for a buoyant growth in the economy. And if you study the data empirically, I think the days of coalition government, the economic growth has been higher than in the growth in the terms of in the days of a single party government.
Earlier this year, when you became chairman, you must have had something that you considered to yourself a top priority, given how much you've devoted your career to this bank. Could you tell us what that is?
That is more internal. You see, the bank has 13,000 branches. So you must have layered structure for controlling them and directing them. So we had one layer at the local head offices, which are 14 of them. Then there was a second layer at what we called at the zonal or module level. That was about 50 of them. Now that structure was dismantled, and after the 14 local head offices, we had the regional managers who were about 250 in number. So we thought this is too big a gap. The practice or the act of doing away with the intermediate level was not very good. So as of 1st November, we have brought it back.
And what do you expect to be the consequence of that? What do you expect to accomplish?
Well, I think we will have a greater handle on the retail activity. It would be easier to push the retail activity both in terms of physical spread as also in terms of financial spread, in marketing deposits, and particularly it would be very useful in recovering the loans and arrest the decline in the rising non-performing loans.
Is there anything at this point that keeps you up at night? Is there anything that you worry about particularly?
Particularly, I think it is the asset quality and the earnings numbers that is constantly worrying. But otherwise, we are lucky to enjoy a supreme, depositors' confidence. And also, I think there have been some irresponsible actions by a section of our staff, the Officers Association, which has possibly dented the image of the bank, and I wish it had not happened.
And what steps are you taking now?
What steps I have addressed in one video to each of the 200,000 employees and saying that the bank is a very good and a benevolent employer. please do not indulge in such actions which threatens or impairs the dominant position of the bank, because this bank is not only important for 200,000 employees and their families, this bank is very important for the entire national economy.
And if you had to be remembered for one thing at this bank, what would that be?
I think I'll have to give it a thought, but I think I would like to be remembered who had brought value-based and professional banking and taking the bank to its top in terms of its professional capabilities and sensitiveness or responsiveness to the customers.
Mr. Chairman, thank you very much for being with us.
Thank you.